Hi, this is Mike Larson from Money and Markets TV. Last week I told you about the yield-chasing trend that's propping up all types of assets, from sovereign debt to junk bonds. But now things are getting downright surreal. Just consider that this week Bolivia announced that it's looking to sell $500 million in bonds to raise money in the international capital market. Now keep in mind, this is historically one of the most isolated and impoverished countries in South America, a country that has nationalized its oil and gas industry, its largest telecom company, and several mining operations over the past few years. A country whose socialist president, Evo Morales, is good buddies with Venezuela's Hugo Chavez. Yet despite its long history of anti-capitalist moves and the risks inherent in any emerging market investment, Bolivia has managed to enlist Goldman Sachs and Bank of America Merrill Lynch to help it shop its bond issue. And if it succeeds, it will be the first time the country has sold bonds on the global market in almost a century. Now granted, Bolivia has been reducing its debt to GDP burden, and it's running a current account surplus. But that's not why investors are poised to lend the country hundreds of millions of dollars. No, they're simply throwing money at anything that yields more than treasuries. In fact, so much hot money has poured into emerging market bonds that countries have been able to sell $55.7 billion in debt this year. That's already more than they raised during all of 2011. Now it's obvious to me that we're already in bubble territory. But if you need more evidence, just look at the iShares JP Morgan USD Emerging Market Bond Fund. This ETF holds debt issued by Russia, Brazil, the Philippines, Mexico, Venezuela, and Peru, among other countries. And as you can see, it's trading like a housing stock circa 2005. Of course, this doesn't mean the market for risky bonds is going to implode tomorrow, or next week, or even next month. We've seen over the past few years that easy money-fueled bubbles can persist for longer than they should. But we've also learned that we can't expect Wall Street and the major ratings agencies to give us advance warning to get out before those bubbles burst. So your best bet is to listen to independent thinkers who have no axe to grind or agenda to push. We at Weiss Research certainly fit the bill, but don't just take it from me. Listen to PIMCO's Chief Executive Officer, Mohamed El-Erian. He says, quote, "Many asset prices have been taken close to what would normally be regarded as bubble territory, with some already there." So please, if you own ETFs like the one I mentioned, or emerging market bond funds, or some of the other overinflated assets that are levitating on a flood of Fed-fueled easy money, now is a good time to start bagging gains. I'm Mike Larson from Money and Markets TV. Thanks for watching.